All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for today's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're so happy and grateful for all of you being here with us on a Friday. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes. And as always, let's make sure that we participate and engage. Quick sound check. If everybody can hear me loud and clear, please drop me a one in the chat. A little early Friday morning participation is always good. All right. Appreciate it. Thank you all for being here. Ryan, good morning, sir. How are you?
Good morning, bro. Doing well, man. Glad to be here. How are you?
I'm doing great. Doing great. It's Friday, right?
Yes, sir.
TGIF, right? Always excited when it is Friday and we're coming into weeks in on what has been a pretty good week, right? In the market. So let's take a look at the Forex calendar. We could see, right, as compared to last week, very light, right? We were light yesterday. Thursday, we had the ECB president speaking. Not sure what the topic was. I have to follow up. But today, she is speaking again. Jordan spoke today at 3 a.m. I've got to get caught up on that. Definitely wasn't up for it. We got for Canada, we got core retail sales coming in. That's going to be interesting to see if it falls in line with what's going on in the U.S. And for the UK, we'll take a look at that in a second. Those numbers that came out, and then we also have existing home sales coming out as well. So that's going to be interesting. That'll be another key data point in regards to possible, tightening. Right, starting to feel that squeeze. Still have some recessionary fears out there. It's back and forth. The markets versus the Fed. Right, that's all it's been. You listen to the news and you read the reports, and then we have another FOMC member, Waller, speaking today. So watch out because we saw what happened when Bullard spoke. Definitely drove the market to the downside. So good. That's at 1 o'clock though on the Friday, but you never know. You never know. So just be aware that if you are trading, if we go over to trading economics, we can see that UK sales unexpectedly fall. Right, retail sales in the UK sank 1% month over month in December, following an upwardly revised 0.5% drop in November, and compared to forecasts of 0.5% gain as rising prices weighed on consumer spending. Compared with December, sales declined by 5.8%, the most for that month since records began. All right, so we just had some retail sales numbers that slowed in the United States. So we see here Germany producer inflation slows to a 13-month low. So start getting mixed data signals. This is going to be quite interesting. First quarter of the year to see what happens. We got Asian stocks advancing. So you got some decent signs on one end in regards to inflationary pressures and being able to potentially avoid uh, a recession, a deep recession. Maybe it's going to be mild, but then we've got who was it? Right? Was it Google that just laid off a bunch of employees? I think
Um,
that's
Capital
the
One.
It was
Cap,
Microsoft.
Microsoft.
Microsoft,
That's right, Microsoft.
and
Thank you
then a
for
few
that.
weeks ago we had Salesforce as well, laid off 10,000.
Correct. So, uh, you know, we'll see how it goes. A lot of caution out there. So we'll continue to follow, but you know, hold super tight to the technicals right now because those are the footprints right there on the chart for us to follow. And yeah, I mean, it's been working out pretty good so far this year. So why don't we jump over to the charts? Ryan, anything else? It's a pretty mild day in regards to fundamental reports and things like that.
Yeah, pretty mild. Nothing else to add.
Okay, cool.
I think there's
Uh,
one big thing I also saw looming. It had a big effect on the crypto markets. Is the question about whether the U.S. is going to raise the debt ceiling or not.
oh yeah. Oh, that
Yeah,
whole thing is raging. Yeah, thanks for bringing that up. That is at the forefront. And we've got a divided government right now. This is going to be quite interesting.
Hey, Benny,
Yes.
I have some question about the fundamentals about the old girl in Europe, her speech. She went over, she was talking about once China start coming out of these lockdowns, it was going to start increasing. I'm not going to say it right. Inflationary rises with high demands in commodities. So then it led me to an article about the egg situation that Malaysia is getting a lot of orders from a lot of different suppliers for eggs. And then it was another article about aluminum. And I had just wanted to know what I seen a whole bunch of charts. What would have been the best chart to view aluminum?
That I'll have to look up, right? So that's
I mean,
that's a
whenever
great
you
that's a
can, but
great
that was
question.
just some
CMX.
things, and I was just trying to
I'll
be
look it
sure.
up for you. Yeah,
Okay,
because you got you have aluminum itself, and then you have companies, right?
right,
So
and yeah,
companies have been traded. You know, like I know Kaiser aluminum is real big. Century aluminum. Yeah, so it depends. So I'll look up some stuff for you on that.
okay,
But I know on the what is that on aluminum? The NASDAQ, I believe CMX. Potentially somebody could double check me on that, but I think that's what CMX on the NASDAQ for aluminum. So, but yeah, I say yeah, Joey, tech jobs, right? But that's just like whenever there's any type of shift in momentum, the tech sector gets hard first, right? Because there's so much money in research and development. When you talk about risk, overall risk assets and things like that, it falls in tech. So that's where you usually start to see a bit of the downturn, first in situations like this. And it's in that tech sector. Because the people are feeling the squeeze and there's some caution out there, and they're not willing to take on as much risk, right? They're not willing to put, when you talk about research and development, things like that, some of that money starts to dry up, so in the tech sector. And then it's true that debt ceiling is going to be an issue. It's always a battle. Of course, I think at the end of the day, historically, they've raised it, but we're in a more divided government than ever before. It's going to be a lot of give and take, a lot of pushback. We'll see what happens with that. So thanks for bringing that up. That's a very, very good point. That always looms over the markets when this happens. So let's see. I would imagine that the crypto kind of follows along with tech. Seems like, at least that, Ryan. What do you think about that, Ryan? I think that's what we've seen so far with the crypto
Yeah,
markets.
it's moved really, really closely with that, almost identical. So it definitely moves in the same direction as tech.
Yeah. Oh yeah. So we'll continue to
You
keep
mean
an eye on
S&P, right?
the tech. The tech sector, right? It's a huge part of the S&P.
Okay.
Right. But when you look at the S&P 500, when you start to divide that up by sectors, healthcare, energy, things like that. So tech is not the entirety of the S&P, good percentage, but that's just one sector. So a lot of times while other sectors are holding pretty strong and tech gets hits first, you start to see it in crypto too. So let's get it rolling. So we look at the US dollar starting to find some footing. Okay. We know that dollar can also act as a safe haven. When you start to get global concerns and global fears, things start to tighten a bit. The dollar can act as a safe haven. The world's largest economy, okay, nation's reserve currency. Right now, a lot of investors, when you look at the opinions, it's like, hey, maybe not so much of a big year in equities, but when you talk about fixed income assets, bonds, and things like that, where you can get a guaranteed return, not as high as you would get on the market and riskier assets, but hey, stable, I can get 3%, 3.5% on fixed income assets. Hey, United States bonds don't seem so bad, right? Because everything that's been going on with inflation and the hawkish Fed. So the dollar, I wouldn't be surprised if it found some support and, it made it move back up to the upside. But that's yet to be seen. So we'll let that all play out. But right now, you can see how it's just ranging. It's just ranging. We're still within that AP boundary. It's retraced 86%, right? Even on your DXY, you got an 80-20 play there, right? That triggered that downside move technically. And we'll see what happens. So we got a range and it's starting to on the day, right? Moving and shifting to the upside. Here's your zoomed in view of it here. So if we take a look at this swing to the downside off the high, brand new AB boundary, right? So we'll see if we can get back above that daily resistance level there for that swing, but pretty much ranging though on the dollar. So we'll continue to watch it. Let's take a look at the as we close out the week, move in and see what's going on the SPY. Okay. So look how we've come right back down, the back and forth. So when you have a lot of pundits and investors, you've got to divide, right? Hey, what we seen coming into January was just a bear market rally, and the reality is gonna set in. We still have a long way to go. You see what happened when you had a hawkish Fed, when you had what was that, right? St. Louis Fed Bullard, right? We posted that article saying, hey, we still need to be hiking these rates, right? 5.25. We're not quite there yet. Okay, we're not quite there yet. And then when we get the rates where we need to be, if we get to that 5 and 5.25, they need to hold it there. Okay, they need to hold it there for a while. It's going to be sticky. Now, you got the market saying that, hey, they're going to slow the rates, right? Which we're already thinking in February, 25 basis points instead of 50. And then they think they're going to eventually cut rates by the end of the year. Some investors, right? Some major players. Some say, hey, I'm not betting against the Fed, right? Rolling with whatever the Fed is going to say. Bullard's been strong from the beginning, right? Bullard's been super strong from from way back when, before they even started hiking rates. He was calling for 100 basis points before the end of June last year, right? Before the end of the fiscal year. So he hasn't changed his tone one bit. We've got another Fed representative speaking today. So watch out. But we've come right back down to this level, right? To retest this level again on the S&P. So we'll see how it plays out. When you switch over to the US 30, you most likely have got the same price action, even more of a downside move on the Dow, right? Right back into that zone. So there was your rally, and now we've broken right back. Lots of back and forth. Lots of back and forth. Technicals tell the tale on what's happening. Okay. So that's your US 30. We'll take a look at gold. Okay. Continuing, right? Bullish move. Okay. Okay. Ever since that break, big time. And that correction and that pullback that we marked up, it's been long, right? Has resistance becoming future support, and it's just been moving upside, right? So we're probably going to run into that D extension. We'll see what happens from there on gold. But overall, bullish, right? Maybe coming into an area for a correction. And then if we come in and we take a look at crude, okay, we are still, right, moving above that trend line that we drew a long time ago. We're coming to some resistance at 81.53. We're testing it again. Let's see what happens with that demand, right? We heard mention China, right? China reopening. A lot of people are hoping that comes through, creates a lot of demand, right? That can help us, globally ease the recession fears a bit, but that's yet to be seen. It's just the beginning. Like Joey said, ECB President Lagarde saying, hey, that could raise inflationary pressures. The euro, they're hawkish, right? The European Central Bank, they're hawkish right now. They're hawkish with the euro. So we definitely see more upside movement. In February, we've got a lot of rate statements coming out. US, Europe, other central banks. So February would be quite interesting to see the price action that occurs as a result. But this is your oil price. Okay, haven't broken above that level. If we do and we close, we look for breaks and retests and further moves up. Okay, if we could get through that 81.53 level, rejecting so far, and we have in the past, near term. All right, so that should move on oil. Let me sort this out and take a look at Bitcoin, right? We had the rally. Okay, and you can see here how we're pushing that level at 21,477 level off the lows. Okay. If we come down to this 4, you can see we got a brand new AB boundary and we're just hovering. If we get back below 20,708, right, we got another level here now of support. Okay, we may see further declines. Let me adjust that a little bit. Okay. So we'll see if it gets corrected. Right, some of the fundamentals that's going on, right, with the tech sector. Let's see what happens. Go back to this daily chart. Okay. You can see where we are. Right, we've had this drawn up for quite some time. Quite some time. See what happens. See what happens. See if we can see if it holds here. It's a critical area for it. Let's see. So that's Bitcoin. Let's go and take a look at, I think I got that correction on Bed Bath & Beyond. We got it. Yep. All right. So you can see it's starting to pull back. Right. It's kind of just sitting there. It's interesting to see what happens if we can get a continued upside move. Let's see. We'll see. Now, so let's talk about, want to go over some of the setups here. I do have some opportunities pending that are not quite ready yet, but we'll take a look at it. Look at those. But let's go back, take a look at some of the setups that we posted in the Discord this week. And hopefully y'all had the opportunity, whether you're in demo or you're trading live, you had the opportunity to take advantage of some of those setups in addition to your own setups, you know, that you're learning to find and take yourself. But let's start, since we're at the top, let's start with the Aussie setup that Ryan posted earlier in the week, right? So this, we can go back in the past a little bit, because previous week, was that not showing? Okay, well, it's not showing now. So, oh, it's on the 15, I believe is where I had it. But we had a markup on the swing. Yes. Okay. Because, right, sometimes you win and sometimes you learn. And this goes into a key part of our methodology that we talk about. So we have this AV boundary here. Okay, that set up for us. Here, so we got an A. Right, we got our A, increase that a bit. We had our B boundary here. All right. Now, I am going to take this off, and this is the latest move. Okay, and Ryan posted that beautiful swing to the upside, but he posted it on the 5, so we'll take a look at that as well. But the original play, right, that we posted was, hey, we were targeting Aussie strength, C to D move. Okay. So we had 3 TP levels set, 64.33, 64.95, and then a projected, you know, a level here, 65, 248, and then your ultimately your D extension at the 1.618. All right. So multiple levels to take profit depending on the type of trader that you are. So what happened was, look, we came into off the swing, we came into TP1, right? And we hit that. And we actually got beyond it, and then it failed, right? It collapsed. Okay. It collapsed, turned over, right? We got the you know, Fed representatives coming out talking super hawkish, market turned over. Okay. Market turned over, took out the A, right? As long as it doesn't take out the A, it has no choice but to go our way. Well, it took out the A. Okay. And so in our past lessons, right, we talk about when you get that A taken out, and you're, especially when you're playing on these lower time frames, flip your fib, because now we've taken out the A, and that can set you up for the correction play. And then if it continues up from there, right, then you're already long off the reversal play. Because sometimes, right, overall, so if we think about top-down analysis, okay, I think I'll be better off come out a little bit, just draw this up first. So we know we got the impulsive move to the downside as a result of some things that occurred fundamentally. Hey, it happens, right? That's why we use stops. We got TP1. Depending on how you manage that trade, maybe you took profit there, took something off the table. Maybe you didn't. You were holding, and then it swung down and hit your stop, right? But when you look at waves and you look at how each time frame is just a fractal of the other one as you move down. Okay, so if we have, you know, a higher time frame chart, and we get an ABCD wave on a higher time frame. So like this. And what will happen a lot of times is that if you have an AB boundary, say on your 4 hour, let's do it like a 4 hour. So this is a 4 hour wave. So what will happen oftentimes is that we know when price is moving up on your 4, on your 15, okay, we're just making smaller ABCD waves. So right, we're moving up. Okay. Then we get that shift, right? And this is where you find like your head and shoulders, okay, and your crown formations, stuff like that. So you're making smaller waves, like so. Okay. Down ABCDs. So what'll happen a lot of times is that if you plan on your lower time frames, and say you're on a 15-minute chart, so this one over here is going to be my 15-minute. Okay. 15 chart. If you're saying, you know what, I'm going to play an ABCD wave. But what happens is sometimes if you have a say you have a 4-hour wave, everything's in line. If you get a deep correction, okay, on your 4-hour wave, say like a 786, 86, sometimes even a 61.8, right? It'll force, okay, 15-minute. So I've got a deep 786, 86 retracement. On my 15-minute, it'll take out my A. Everybody follow me on that? Drop me a 1. Okay? Because it's just a deeper correction. But look, I'm still within this AB boundary. Okay? And then once price settles, okay. 1 second. And it wants to make the U-turn, it'll push down. Okay. Like so. Then we'll get that reversal. See? Like this. And then it'll continue along its way. Bullish. Okay. So, and then, like we say, this is where you get your crown formation. Head and shoulders formation. Okay. Those price action reversal patterns that we talk about. Okay. Those key formations. Reverse out. Okay. So what'll happen is you're like, hey, I just got taken out. My higher time frame, okay, I've got a deeper correction. So we say, you know what? Well, the A got taken out, we're moving downside. See that fit like that? Say, okay, took out the A. We're flipping our fib. Like so. And then guess what happens? You have where price we know that now we have a new AB boundary to the downside. It's amazing how the market moves. So now I have a new AB boundary to the downside. Okay. So now we've got kind of this misalignment going on. But look, this is why we don't mind trading those counter trend trade moves. So we know, hey, when you see this setup, AB boundary to the downside, we either get that B to C move immediately, okay, or we get that correction play like so. Shallow retracement, less than that 382. Okay, we get to move down, 118, 127 zone, and then we reverse. And then we set our targets, right? So you'll have, okay, this is all you'll see coming from us, right? So same thing over and over again. So you'll have your 382. You'll have your 61.8 as a TP. We always like to say TP3, if you put it in there, is the A boundary. Right? Then the saying is the same, right? We've got a correction going on now, but if it takes out that A, right, we've got a reversal. So as this this 4-hour wave finds the support, right? After this deep correction, it starts to move up on your lower time frame. This is going to start to move. to the upside and start making ABCD waves. And if we take out that A, now what? We're right back in that uptrend. Now we've got our alignment with our 4-hour wave, that C to D push that it wants to make. Now we're back in alignment. Now we can continue, right, to move bullish like that. So that's why we trade the way we trade. Okay. So you can see here how you got a deep correction on a higher time frame move. It might be a 1 hour, right? Use the 4. Deep correction. It took out my A on my 15-minute wave. But once that higher time frame wave found support within that AB boundary and started to make that C to D push, it got corrective, right, to the upside. And now we're back moving, right? We've got those up ABCD waves moving now, okay? So when you look at, and you come down to where we are in the market, price came down and took out this A, right? So we flip our fib, boom. And you can set you some targets. $382, 61.8, top of the A boundary. Now, if this is really the rally, again, it's going to break through these targets and it's going to continue to the upside, just like we drew it up, right? So you can see here on your Aussie Swissy how you got a correction, right? You got a major correction that occurred as a result. If this wants to continue bullish, then eventually you're going to see price move up through these zones and continue long. And when it takes out that A, you're going to have a new AB boundary running to the upside bullish. And now you got alignment again, just like what's going on here, right? This is nothing but that correction. You see how that A got taken out? You had a deep correction on your daily time frame, right? It pushed and took out all of these A's. Now we're correcting back topside. So if the rally continues long, okay, risk on, then you're going to see this price correct and move long. If not, right, it's going to settle. You say you got wicked out there, and it's going to continue to move. It's going to continue to move bearish, right? But right now, we wait. We can't tell the future on that. Can't. Okay. But what we can do is take advantage of the near-term price action, right? And that's exactly what Ryan posted, right? That's exactly what he posted. He said, hey, we've got this AB boundary on the 15. I'm going to bring it down to the 5. We've got an 80-20 swing going on here, right? You see how we didn't really get a correction to the 382, shallow retracement, that B boundary was broken. Price came and settled, and it made the swing. We didn't hit the D extension, see? And now we're moving to the upside, right? So even off of the cloud break, okay? And he posted it just as that cloud was breaking, 72 pips. Now we got some corrective action going on, but we got close to that 382 target, right? Right. You should be securing the bag. That's a good move, right? Over 70 pips. But that's how we move about the charts and finding our setups. However, whatever way the market is moving is going to do it in waves. Everybody starting to see that. Drop me a 2 in the chat. Let me know you guys are with me this morning. All right. It's going to move in waves. Thank you. Whether it's a C to D push zone with the trend, whether it's a counter trend corrective move, a B to C, right? Whether it's coming right off the B boundary or 80-20 swing, however it does it, it's going to move in waves, right? Okay. You do have those occurrences where, hey, you get strong fundamental occurrence occurs, price just blows through all technical levels, right? Like we saw recently with the Fed speak. But typically, it's gonna move, right? It's gonna move in ways. So that's the odds switch. That's how we still are able to, hey, boom, target one guy hit with the C to D swing, but it failed. It eventually failed. We got a deeper correction. That's okay. That's okay, right? You still can make the play. Any questions on that?
No.
All right. Somebody else trying to speak? No. Good.
No, I said no.
Oh, okay. Thank you. Appreciate it. All right. So let's go and take a look at and you can see when you look at how things are setting up, right? While we look at all the pairs, because if you look at the Aussie Swiss, right? Commodity currency versus the Swissy, and then you go to the CAD Swiss, you can see what happened with the price action, right? And how that's swinging to the upside, right? And when you're using the fibs, the beautiful thing is you don't have to go far to see that it happens, right? You just go to the next fib back and look at the correction off the B boundary. Here, you didn't get it. It just failed, right? So I call it the 80-20. You do have a percentage of the time where the market's impulsive and you don't get that deep correction, right? But it almost did, right? Almost pulled back to that 382, right? As choppy as it was. But if you look at the Aussie Swiss, right? You look at the markup, right? Look at what occurred, okay? So this one was posted in the Discord, and you can see the move. So if you're using the cloud, right? Choppy, Swissies and NZD pairs, right? Let me know if you agree. Get choppy. Like this seems to have,
Man, yeah.
yeah, it just seems to have choppy price action. You know, with those two currencies. I don't know why, but it does. But you can see that once it got going, right, it moved pretty good, right? We're through TP2. We actually went beyond it. Now we corrected back to the down. But then it agreed. Yeah, it is, right? And like I said, there's a lot of traders who won't even touch the Swissy because of what the S&B can do in regards to the manipulation with the currency, right? Increasing and decreasing bank deposits more frequently than you see with other central banks. But yep. So that's a move to the upside, but it's the same approach. Right? And you can see where you had this impulsive move. You had an AB boundary. We didn't get the correction on the previous fib, right? But when you look at those alternating corrections, look how big that correction is. Moving to the upside. Okay. Moving to the upside. It's just trying to find, right? It's trying to find a base, right? Trying to find a base. And we posted this in the newsletter, right? Some potential long-term plays. You know, if we get, and the mindset on that is fundamentally like if we do see, you know, a positive impact from China reopening and market rallies, right? And the demand increases, right? Increased demand typically favors oil, right? And the CAD. And if you risk on, right, your Swiss is typically a risk off currency. So, and it can act as a safe haven. So if we're risk on, right, that bodes well for the CAD and you can get a push up off this support. It may take a while, right? But long-term potential swing. We'll see how it plays out. We'll see how it plays out. Sometimes, hey, you could be in the right place at the right time. And, you know, if you avoid recession and you do get that increase in demand for quite a while, catching it off that bottom could be huge, right? Could be a huge position trade. So we'll see. It's testing. It's testing. So that's the CAD Swiss. Any questions on that? Awesome. Take a look at the NZD CAD. and we come to the lower time frame, right? On the 15, and you can see the swing, right? How we've moved right into this 80-20, right? Another reversal. Previous fib, reversed, okay? So out of that 80-20 zone, right? It's 58 pips, TP1, 48, depending on where you got in and took the trade, okay? 60. Nice setups, right? If you're playing your cloud breaks, okay? Right? You see, once it got going above that cloud, so you got going above the cloud, you can see it, right? Right off that 80-20 swing, and we just kept moving right on that. Okay, so the cloud could be really good confirmation. All right, got choppy, right? But you can see how it pretty much held and continued to move. And it might not be your thing to hold, right? If you use a higher risk percentage per trade, you might be in for 10, 20 pips and you're done. That's fine too. Right? However you want to play it. Okay? A lot of ways to skin a cat. Don't criticize anybody's style. However you get it is how you get it. Whatever works for you as a trader. Okay? So that's the NZD CAD setup. Euro CAD, right? So you see that Aussie Swiss, CAD Swiss, NZD CAD, Euro CAD. Right? Currency pairs are fun to trade, at least in my opinion. Okay. Come in, we take a look at this Euro CAD. Right? You can see how price is just hovering. But you know what? There's setups we can find that may be in for a deeper correction eventually. See what happens as we move, right? Throughout the week. So if we come in, right? Still, see? Still, we dropped off of that zone yesterday, right? Out of that 80-20 zone. It's 90 pips. Okay. Then we got the corrective. Price action. See? TP2 is here, 145.16. Right? Same thing. Over and over and over again. A, B. Look at that deep correction. So if you're trading off the 5, an ABCD wave on the 5, A6 retracement, almost 100%, that takes your up fib, that takes your fib out. Right? And then look how we moved. See how last level that was hit was that 8.6? You see how you got to reset? Soon as that 118 extension was hit and price formed a high, it gave you a new B boundary. C becomes our new A, D becomes our new B, and then we're looking, right, for the ABCD wave to continue to play out. So even on this sub fib, down AB boundary, it's going to play out. Look, A, B, C, D, right around that zone. See if we can get that move to finish out. Right? But that was almost 100 pips off that swing. Okay? Off that swing. So that's the Euro CAD. We're back below that 145.93. So if we come into something like the 5, bang. See? It's a huge bearish signal right there. So if we can get that continued down to that support point at 145.64 on the 5. Okay. So if you're a person that likes to snatch 10, 15, 20 pips out of the market, that's all, that's there. Right? That's 10 there. Coming off the bottom of that right there. This is just getting going, really. Right off the cloud break. So barely moving. 15 pips down. You can see that just moved. Right? Mad I missed that one. Questions?
I just have a question in regards to clarity again on the overall strategy. So what I've been trying to do is, go in from the large time frames like a month, and then go down to the hourly and 15-minute. And so what I'll do is I start to draw like the support and resistance in the monthly zone, and then as I go down into the say 7 day or the hourly, um, I try to see where the price is kind of moving towards and which levels it's trying to, test or pull back from. Is that kind of how you would do it, or am I? Is there something I can improve?
No, you're on, right? First thing you want to do is your top-down analysis, right? You want to do your top-down analysis. You want to go through and mark your levels, right? So when we look at this EuroCat, we know that the euro overall fundamentally, ECB has been hawkish in regards to attacking inflation, just like all central banks, but their rhetoric has been fairly hawkish. Plus, we know they held rates so low, right, for quite some time that they've been playing catch up in regards to raising rates, okay, and tightening. So they continue to be hawkish. So look, you see this move, right? So you see a while ago, we marked up this this breakout here, this range, and then this breakout, and we moved to the top. But now we're coming into, so we're overall bullish, but we're coming into a key level of 143, 146.36. Okay. So if we come back and we look at the daily, you can see, look, it's been making ABCDs. So here's where we are. We're in an up retracement zone. Right. So that's how we start to figure it out. So you're spot on going from your top down marking your support and resistance levels. Okay. So we're in an up retracement zone. So we've retraced to a 236 level here. And we've run right back into this B boundary zone. And so we could be corrected. Right. So when you're on your lower time frames, you look for those opportunities with those smaller waves to say, hey, okay, how deep can we get? Is it going to hold at this level? Do I get a correction? Okay. You can make money there. Okay. If it breaks and it continues long up until this 118.27 zone, 118.127 zone, your lower time frame waves are going to put you there. Okay. All right. So if you get a break and a retest of the zone, right, on your lower time frames, there may be a play. Okay. So it's just building awareness, right, from zooming out, getting outside the frame and looking at the overall picture. I'm bullish. What am I in? Am I in an up retracement zone, like so? That, okay? Or am I in a C to D push zone? Because that's gonna let us know how we, that's gonna let us know how we want to play it on the lower time frames. Okay, at least set our fibs up. So this is where we are. So you can see, look, we're in an up retracement zone, and you see price turning over. So, for example, if we come to this Euro Swissy, right? We know we're moving long, right? But see this here, and this fib is off. So I'm just gonna delete it. So we know we've gotten a decent correction. Okay, here. We know we've got an impulsive move that's broken this level. That's why these levels are important. So if it moves, if this is a C to D push zone, it's going to move in waves. And now we've got this correction. So I know I'm swinging to the upside, but I've got a corrective wave coming. Okay. So I've come down to like this 15-minute here, right? So you can come in, see how, look at this swing, right? We've been moving up. That played us right into an 80-20 swing back to the downside. But this move here is getting, even on this low, let me see something. Yeah, got a correction going. Downside, the chart. No, give me 1 second, everybody. Let me get this set up. Watch that one, everybody. If that one breaks cloud, right? Watch. Let's see how that goes, right? We don't have a Kumo twist yet, right? Moving bearish, but that's getting close to breaking that cloud, right? There may be a bit little move to the downside on the Friday. But so watch that Euro Swissy. See if that holds or if it breaks. But if we come back to our Euro CAD, it's your top-down analysis, right? And exactly the methodology that you were explaining, right? Top-down marking levels, because when you're on that higher time frame, you're trying to first to determine a directional bias, right? And we can see overall, long-term perspective, our directional bias is what?
It looks sideways still over there, but up.
Right. Your overall move, though, has been up, right? And we have been moving a little sideways, so we're neutral to bullish. Can we agree on that?
Yep.
Okay. So I know, because I've done my top-down analysis and marked my levels, that I'm right back into a key zone. Past support becomes future resistance. So I know that even though I'm moving up, I could be getting ready for a correction, right? We don't know how large or small that a correction may be, but we're in a key area right now. So I'm overall bullish, but as I move down, I may be coming into a point where I'm in a retracement zone. So if I'm in an up retracement zone, that means that I could start making, if that level holds, I could start making some down ABCD, right? So back into my zone, right? And you have to decide, do I want to play that or not? If I'm a long-term swing trader, I'm bullish on the Euro CAD, I'm trading on my daily chart. Maybe I want to see it just come right back down into this level here, and then I'm going to look to buy trading with the trend. Okay. So it's just a matter of where am I at? I'm moving up. I'm in an upward trend, up retracement zone potentially. Is price going to retrace at this B boundary, right? Or is this going to make a slight correction and move up to this 118, 127 zone? Then maybe we get a correction, right? But it's looking like it may want to push down a little. Okay. So as we move down through the zones, right, we can start to see, hey, look how this correction has gone. We never got a 382, but we're coming into this key level of daily and weekly resistance. Maybe we do make a correction, right? Maybe we do make a correction. Okay? Maybe it's just a temporary one. Maybe we don't get all the way back down here, but I know I'm in an area where I can see price correct. Okay. If I never put a fib on here, right? If I never put a fib on here and I'm just looking at price action, support, and resistance, this just formed a swing high. It's holding. Look how it's breaking, right? So if we're just looking at support and resistance, look at how you got this railroad track candlestick formation here. Okay. Huge bullish candle followed by a huge bearish candle. Look how we broke back below 145.93. Look how we wicked out with that doji, and look how it's holding below that level. Okay. That would set me up if I didn't have a fib on my chart, that would set me up to say, you know what, that's a possible short. Okay. That's a possible short for me there. So no matter how, you know, whether I have a fib or I'm just using price action, support, resistance, I'm thinking the same thing. Right? That's why we believe.
I have one last question.
Sure.
In the beginning trainings, you kind of said, you know, we're not there to beat, you know, the big market movers, so to speak, but we're kind of trying to see, you know, where it's going and kind of, you know, move with the big market players. So my question is, because I see you have the stochastic over there at the bottom, and from what I see here, right now the stochastic is showing that, if I understand it right, that it's all the way at the bottom, meaning that, you know, is this like people moved out, like the bears won? Is that why it's all the way at the bottom? And would this also kind of help me predict what's happening? Because as far as I know, when the big institutions start going in again, they either take out profit by dripping out, so the volume changes, or they start dripping in their positions and then the volume changes again.
Right. We could, right? So with your stochastic, that's momentum. That's saying that, hey, the momentum could be slowing, right? You could stay in a oversold right position for quite some time. Then you have to look at, so let's look at it, right? Okay. So here we're looking corrective. See, to the downside. Here, okay, we're overbought on the daily. Your 4 hour, when you're moving into your smaller waves, see? So what we could be doing is we could end up being stuck in a range, right? We could be stuck in the range. So you look from bottom to top, top to bottom, typically 7 to 11 candles, right? So when you look at your higher time frames, okay, you're overbought, right? Whereas when you're moving into your smaller ways, when you get down to your 4, right, when you look at the cycle, we're oversold. But you see at the same time, what you saw from the very top is, you said it, right? We're kind of in a range, right? That what you said?
Yeah.
Yep. So you have, right? You have some stochastic misalignment. And sometimes when you have that misalignment, you can get caught in the range, right? When you have stochastics not aligned. So by the time, see, when you cycle back up on this 4 hour, you're still gonna be moving, right? From your buy zone to your sell zone. Okay. You get what I'm saying there?
Yeah, I get it.
Right?
Thank you. Yeah.
Yeah, you're welcome. So at some point, right, this will cycle back up and this will hit the sell zone. By the time that hits the sell zone, this is not gonna be back in your buy zone. It's still gonna be pushing down if that's what it wants to do. Right? If that's what it wants to do. So we may be in a position here where we're at these key levels. Right? See that? Okay. And you may get, right, things start to sell off. That'll push you to that lower price. Okay. So what we have to decide, right, if we're using the fibs and we're swing trading, do I want to trade that correction, or do I want to say, hey, we got a hawkish ECB, right? Big money is bullish on the euro. No matter what you listen to, you know, Bloomberg, Reuters, Financial Times, a lot of people are hawkish on the euro, right? But in order for, when you talk about liquidity coming into the market, right? If you're a big mover, right? Think about this. If you're a big investor, okay, if you're buying, you want, right, the best price to buy. Yes or yes?
Yes, definitely.
Definitely, right? So if I've got big money, right, I can't flood it, right? I can't just flood it, because that's gonna push price up. That pushes price up so fast that I'm not gonna get the best price, right? So in essence, I want to see at some point this price come down, so then I can start scaling in orders again. You follow me on that?
Yes.
Right? So that's why we say, hey, we want to try to fall in line the best we can. So if I'm looking at this level here, right, and it's like, right, I'm getting kind of high, right? So I need to potentially at some point, right, we can cash out, and then I'm gonna buy, right? If I'm selling TVs or anything, right, we can cash out. I'm gonna go back. I'm gonna buy more, right? Buy more. I've made the money, right? I got my TVs at this price. I sold them. I found buyers, high demand at this level for the TVs. Sold them. That price is getting kind of high. Let me take that profit. Right? And then when I take that profit, I'm gonna go buy more TVs, and then I'm gonna sell them again. You guys follow me on that? I know it's a lot more complex than that. Don't get me wrong. All right, don't like. Right. So I've sold. People are willing to buy. They're willing to keep buying those TVs, right? Those flat screens, right? But now I'm not finding as many buyers at this level, right? I'm not finding as many buyers at this level. Right? But there's my higher low. They were willing to buy here before, but you know what? There's a demand here. Right? So that's the okay. Great question. Great question. Don't be afraid to ask questions in this group, right? If we don't have the answer, we're gonna tell you, I don't know, or we'll look that up for you. But don't be afraid to ask questions, because that's how we learn. That's how we learn, right? It's that buying and selling that creates the waves in the market. What we're looking at in the form of candlesticks is we're looking at the footprints. Buying and selling, retail, banks, institutions in the market. That's what we're looking at. It's the ebbs and flows. This is why it works for any asset class, because you're still dealing with human beings and human psychology. That's why no matter whether it's crypto, stocks, commodity, it doesn't matter. This is what you're looking at, right? This is what you're looking at. Okay. When we have anybody that works in the medical field on here, on this, in this group?
Me.
Anybody? Who is me? Who is that? Joy. Right. So when you go in the doctors and they're looking at EKGs, right?
Actually, I'm on the other side. I'm on the insurance side.
Okay. Well, when the doctor looks at when the doctor's looking at the EKG, right, and they're looking at those waves, right? I remember my dad was in the hospital, hooked up to all types of stuff, right? They're coming in there and they're monitoring that. They're looking for different what? Patterns, different levels. Everybody follow me on that? Drop me a 3 in the chat.
Yeah.
That's it. That's what we're looking for. Patterns, different levels. Fear and greed driving the market. Look at the reaction to that because you had a Fed chair come out with the hawkish tone, even though they haven't. This is what they've been saying since last year. Look at how people reacted. Regardless of the facts, their optimism, their hope, right? Look at how that sentiment shifted and turned over your S&P. And that's what we're tracking, everybody. That's what we're doing. That's what we're doing. So last one to go over for today is the Euro NZD. Okay. And we can see that one's on the way to TP2 probably. We can break through that level. But look at what's happening. Look at how explosive that move was. Look, A, B, 80-20 zone, right? C, D. Here's our correlating extension. But look how explosive it was. It didn't form the next swing high until way up here. Okay. Look at your retracement, right? When we drew it up yesterday, I believe he said something like, hey, if we get a break, two options, if we get a break and a retest of this zone here below 169.37 and we hold, probably short, the retracement will start. Okay. Or we drew it up, hey, maybe we get that push up to that 118, 127. If Ryan, let me know your thought. If we could get, if I could figure out a way to every time know, right? I guess we use cloud confirmation and stuff like that. Whether when a new AB boundary formed, if it was going to correct right off this B boundary, or if it was going to push up to that 118, 127, we'll be millionaires next week. But
that's facts.
Right. That's it. That's a little bit of that's the unknown. That's the X factor. I don't. If somebody knows of an indicator, there's something out there that somebody has created that I could get a good, right? Just like not a guarantee, but something. Hey, this AB boundary just formed. If I can get this, it's gonna swing down, or it's gonna push up to that 118, 127 zone. We be good to go, right? But I haven't found one yet. So somebody out here do that research. But this is a move down. That's probably going to come into that 61.8. Now, once you move down to this level, it always comes down to whether you're a bull or a bear. And that's the game we play. It's going to come into your sweet spot zone. Hey, I want to start looking for confirmation. So how do I want to play that? If this is my mother chart and I'm using and I want to play just 15-minute ABCDs. Now I'm gonna put my stop below that A, right? Maybe you only take these corrections to the 382, right? So we always say that this is our sweet spot zones here, okay? Your B to C, okay? And then you have your shallow retracement zone for your 80-20 play. We always say, hey, trade safely, right? Back to that 382 target counter trend, take some off. Maybe you got two positions running, one at TP1, one at TP2. Maybe you got one position running, you take half off at TP1, see if you can get price to run to TP2. Okay. But once you get down in the zone, if you're a bull, then you're like, this is my sweet spot. So now I'm looking for cloud confirmation or trend line breaks or a MACD or whatever you use for your additional confirmations that this is going to look to get back long at this level. Okay. So maybe that's however, hey, I've got my cloud running. Okay. Oops. Put this on like so. Okay. And I'm below the cloud. So maybe when I get back below these swing points, either on my 15, my 5, however you want to play it, if I get a break back above, I'm looking for a C to D push at that point. And you put your stop loss in. Okay. Either below the A or below your C. And you know what? Like we always say, sometimes you're the bug and sometimes you're the windshield. But you got a stop loss. So if that's your play back long, play it. Pull the trigger, play it. If you're a bear and you're a counter trend trader, play it. Manage your risk. Okay, that's it. You don't have to make things super complicated. That's it. Can we get another ABCD wave? We got it here, right? That's a winner if you're a bull. That's a winner. That's 115 pips on a 15-minute. So, Ryan, anything to add before we wrap things up? No, we went over, but
Great session, man. And no, nothing additional, man.
appreciate it. Any questions? David, what's up?
I have a question regarding the video library. Did you remove any videos from the video library?
Oh, I don't think so. I know we're working to on the back end. We're working to update, right? A lot of the videos.
There's one Ryan did on trading plan.
Trading plan. I don't think we did. Ryan, can you speak to that?
Yeah, those should still be there. When I get back to my computer, I can double check, but I didn't remove anything. So
No,
if they're not, it's a glitch that I'll have to fix.
Okay.
because I'm looking inside the video library now, and I can't find it.
Okay. So we'll see what we can do about that. Thanks for the heads up on that, David.
Okay, no worries.
Yep. Appreciate it. Anybody else? All right. Well, hey, we'll be back here Saturday morning, 7 a.m. Eastern Standard Time, getting prepped for the week, right? Very, very important. Okay. So everybody have a happy Friday. Let us know what you think about the day sessions, right? We know we didn't do the Asian sessions, right? Thinking about just doing one session and adding an additional day today. So give us some feedback in the Discord. Let us know what you think. Everybody, have a great day.
Thank you, Bay.
You're welcome.
Thank you.